Hello and welcome. My name is Steve Green and I'm the owner of SDG Business Solutions. We're discount resellers for QuickBooks Point of Sale and QuickBooks Enterprise Solutions. We also provide consulting services, online training, and documentation for how to use these products. Today we're going to be doing an excerpt from our book Accounting for QuickBooks Point of Sale and QuickBooks Financial Software, discussing the topic of how to prepay for inventory. In many cases it's necessary to do this, especially for new operations, given that many vendors will not actually ship you product unless you prepay. This also works well for COD. Let's go ahead and dive in and take a look at the QuickBooks Financial Software application, which is where we're going to start since we're writing the check in advance of doing the receiving voucher. Now you can use this method with either writing checks or using credit cards. It doesn't matter. We're going to be doing the procedure by writing a check today out of our bank account. To do that, we just go to banking and choose write checks. If we were going to use a credit card to pay the bill, we would enter credit card charges here. We're going to go ahead and choose write checks. We're going to make sure that we've selected our appropriate checking account from which we're going to pull the money. And we're going to list the name of the vendor here on the first line. And in the payment amount field, we're going to insert the amount that we have to pay to the vendor. So you can see I put in $286.95. Now the interesting part is down here while we're on the expense tab in the account column, the account we're going to code this to is actually accounts payable. Now the function of this is that it's going to record the prepayment as a vendor credit that you can later apply when the receiving voucher from point of sale comes down. The key to this is not only listing accounts payable under the account column, but also listing the same vendor name in the customer job field. If I save and close this, you can see that I can now pop back over into the point of sale system. And when I do so, I've already created this voucher, and you can see it's for the same dollar amount. You can see it's going to this particular vendor that we listed on the prior page. Our system is using billing information to push things directly into accounts payable. You may not be using billing info, in which case when the transaction gets to QuickBooks Financial, you may have to convert it from an item receipt there to a bill. You can see we've also recorded some freight against this. When I save the transaction, it gets recorded in point of sales receiving voucher, increases the inventory, redoes the average cost if it changes. And then when syncing to QuickBooks Financial, which we can do in many ways, but we're just going to choose this particular method to update QuickBooks Financial from point of sale. What you'll see is when you go back to QuickBooks Financial, if I go to vendor and I choose pay bills, you'll be able to see that my receiving voucher has posted as a payable. When I select this item for payment, you'll now notice the middle section of the screen has the ability for us to set credits. I can now hit the Set Credits button, align the payment that I previously made against the invoice that came from point of sale, choose Done, and hit Pay Selected Bills. That's pretty much all there is to it. Once you've done that, your inventory will be in balance. Your bank account was in balance as you'd already entered the payment, and everything should tie out without any sort of duplication. Again, my name is Steve Green. I am with SDG Business Solutions, discount resellers for point of sale and QuickBooks Enterprise, also providing consulting services, books, and online training. Please visit our website or give us a call if you'd like more information. Thanks.